Hey everyone, how are you doing today? I just thought I'd get on here and talk a little bit about the most recent interest rate hikes that we've been seeing. As you know, last week the Bank of Canada raised the benchmark rate by a full point. Now, this was expected to some degree. I would say the size of the hike was really not anticipated by most. We were expecting 0.5 or 0.75, but Bank of Canada went a little bit heavier and we saw a full point increase. We know that puts the Bank of Canada rate now at 2.5, and we've been hearing that the target that they're trying to get to is 3. So I think we can anticipate that in the fall we're likely to see some more hikes, maybe a couple of smaller ones, maybe one bigger one, as they attempt to get up to about 3. So I don't think this is over yet, but what does it mean now? By the way, I'm Tracy Appleton. I'm from My Home in KW Group, working in Waterloo region and surrounding areas. And if you like this kind of content, I hope you'll like this post and follow our page. If you'd like to know what all of this means for you and you'd like to book a phone call with myself or my partner Megan Bell, just hop onto the home page and you'll see very easily you can click on the Calendly link and book a call with one of us. So what does this mean currently for home buyers and sellers? Well, certainly since the rate hikes began this spring, we've seen a definite softening prices in Waterloo region, just as we've seen pretty much across the country. There's definitely a relationship between how cheap money is to borrow and prices that people are willing to pay for real estate. Now here in Waterloo region, the height of the craziness, if you will, with the market this year was in February. We saw the highest prices of all time in the region at that time. In February, our average residential real estate price was sitting just over $1 million. And I can tell you that by the end of June this year, that same average residential price is sitting just under $800,000. So the math is very easy. The market has fallen, yes, about 20% since the height in February. It's important to note, though, that if we take a look at the average price in June 2022 versus the average price in June 2021, that is still up just over 4%, which is a little more normal, a little more typical in year-over-year increases that we tend to see. But what do we think is going to happen over the coming couple of months? Well, I think in July and August you should anticipate, we certainly anticipate, a further softening of the prices. I think they're going to see prices continue to come down a little bit during that time. Now, July and August are traditionally pretty quiet months in real estate. These are not the months of the year when we normally have our highest prices at the best of times. You know, normally people's minds turn away from real estate a little bit in July and August. Homes sit on the market a little bit longer, maybe don't get quite as high a price as they would in the spring or in the fall. I think we're going to see some more softening over the summer. What's that going to look like in the fall? That's a little bit hard to predict at this time. It depends, of course, a little bit on how confident people are feeling about the market, how much the September further rate hike is. These are all factors that are going to play into the prices as we move into the fall. My gut feeling is things are going to level out and probably plateau at that time. What does it mean for individual buyers or sellers? Well, it depends on their situation, as always. If you are a first-time home buyer looking to get into the market for the first time, honestly, this is a good time. As long as you've got at least a sort of a 5-year horizon, you're looking ahead, you're not thinking you're going to have to make any kind of change in that time. You can't time the market perfectly. You don't know when it's going to be at the bottom. You don't know when it's going to start to rise again. But the carrying cost of real estate right now with the higher interest rates is about the same on a monthly basis as it was with lower interest rates, but paying more in the height of the winter this year. Myself, I'd almost rather pay a little more in interest in the short term and get a better price on the real estate, knowing that what goes down does go up. That's true of interest rates, and it's true of the prices of real estate. Over time, real estate is a good bet and tends to go up. And the thing is, rents are going up right now. They've gone up quite a bit and they continue to go up. So if you're a first-time buyer and you're wondering, should I be trying to get into the market? Is this a bad time? I don't think it is a bad time. I think it's a pretty good time to get in if you're in a position to do so. Another group for whom this is not a bad time at all is somebody who's wanting to make a move-up buy from a more modest home to a more expensive home. Normally when the prices are falling, that's a good time to do that because the higher priced properties are probably taking more of a hit on average than the more moderate properties. So if you've been thinking about making a move-up, this is a good time for you to do that. I do suggest you're probably going to want to sell first and then buy in this type of market. It's going to be very risky to buy and then sell because you don't know what you'll get and you don't know how long it will take. Another group that should think seriously about this being a good time would be condo buyers. The condo market has so far not taken as much of a hit on prices as the freehold market. So if you're in a condo and you're thinking to get into freehold, the coming few months is opportunity time for you. So, again, I'm Tracy Appleton from My Home in KW Group. If we can help you in any way, reach out. We're here to help.